and he promised a market boom like no other, but suffice to say, it's been damaged like no other. How are you assessing Trump's first 100 days?
Well, I think the first thing we must remember that he has made revolutionary changes that affect not only the U.S., but the world. It's an amazing feat that he's accomplished in the sense that he's upset the apple cart, so to speak. So we're now in a new era, a new way of thinking about politics, about economics, and so forth. So the first thing that comes to mind is that we've got to get used to a whole new order, a new way of thinking, and also we've got to get used to uncertainty. We think the uncertainty will continue for the next 3, 4, 5, 6 months, and we've got to get used to it. Now, when you have a situation like this, of course, it opens up opportunities. We've seen the market come down. Some stocks are looking very attractive, and most particularly, countries like India will be benefiting from what's happened with China, and the other countries that will benefit. So some of these emerging market countries will do quite well in this environment, but we have to wait until all of this evens out and we see a settling down of this uncertainty.
Mark, you talk about a new way of thinking. Suffice to say that, the market thinking has kind of seen a rewiring. Talk to us about the psyche of the investor right now. Is it about fundamentals? Is it about, keeping up with the headlines? How have things changed in the way markets think, in the way investors think?
Well, of course, as soon as Trump made the announcements regarding tariffs, the first thing he did, of course, was create this great uncertainty, and the market came down. We're looking at 20%, depending on what market you're looking at. Now, usually, when you have a drop like that, people start thinking, oh, maybe we should start picking up a little bit, or at least not selling anymore. And I think we've reached this point now. The next step, of course, is to assess what comes next and where the opportunities are. Obviously, some companies are going to benefit from this tariff situation globally, and some will not. So what we're doing is looking at the whole picture globally and saying, okay, let's make an assessment of what we can expect going forward. And what that means, of course, is a total new way of looking at trade, looking at politics, and looking at economics.
What gives you the optimism this will pan out the way you're expecting?
Well, I think we have to be patient. We have to wait for the next 2, 3, 4 months to see how this all pans out. One of the things you must remember with Trump, he is in a bargaining situation. He is trying this, trying that, threatening this, pulling back. So you're going to see more and more of this negotiation and bargaining taking place. And within the next, I would say, 4 to 6 months, this will all pan out, and we'll see a settling of what the agreements are going to be with various countries.
Do you still maintain that all markets are in play right now, except perhaps China, which is the crux, which is the focus of the trade war with the U.S.?
Well, all markets are in play. There's no question about it, because everybody's uncertain. But you can see strength in some of these markets. For example, India is doing quite well. Some of these other markets are doing okay. But at the end of the day, the uncertainty will remain. And of course, China will be the big question mark. If China does not come to the table, and if no agreement is reached with China, then I expect China not to do very well.
How have you been navigating the market? Are you dipping your toes in markets you haven't before? What are some of the changes you made in your portfolio? And what in particular are you looking out for that will shape how you think, about where you place your money in the next few months?
At this stage, cash is king. So 95% of my money in the funds are in cash. We're playing a little bit with S&P 500 index funds, just to keep tune of the market, because the S&P is a leader globally. But we're also looking at some of the emerging market stocks, but in a very, very careful way. I think right now we've got to keep cash and be ready to move when the time is right.
But keeping 90% of your funds in cash, it's really, really high. That's possibly the highest I've heard so far. Why why do that? Aren't there enough opportunities out there for you to be deploying your capital?
Well, when you're getting 4 or 5% with no risk in dollars, you're doing quite well. Of course, we're not going to hold that for the whole time. It's not going to be more than 3 to 4 months when we begin to do more, depending on where the market is. If the market comes down further, of course, we will be putting more money in.